Hey there. Did you know that Warren Buffett, the Oracle of Omaha, has amassed a net worth of over $100 billion through his investment strategies? That's right. His approach isn't just about luck or having an extraordinary intellect. It's a masterclass in patience, discipline, and strategy. And today we're going to dive into the real key to success in investing, according to Warren Buffett, and spoiler alert, it's something you can start applying right now. Welcome to today's video. We're talking about one of the most successful investors in history, Warren Buffett. He's not just known for his massive fortune, but also for the timeless wisdom he shares about investing. Over the decades, Buffett has become a symbol of steady, disciplined investing, avoiding the pitfalls that trap so many others. But what's his secret? Is it some hidden formula, a genius IQ, or an insider's edge? Actually, no. The real key to his success is something much simpler yet incredibly powerful. It's the right mindset. In this video, we'll explore the fundamental principles that have guided Warren Buffett's investment strategy, principles that anyone can adopt, whether you're just starting out or you're a seasoned investor. By the end of this video, you'll have a clear understanding of how to think like Warren Buffett and elevate your own investment game. So if you're ready to learn from the best, let's jump right in. Before we reveal Buffett's secrets, let's talk about some common misconceptions about investing that trip up so many people. One of the biggest mistakes investors make is believing that they need to be constantly active in the market, chasing the latest trends, or trying to time their buys and sells perfectly. This approach often leads to disaster. Here's the thing. The stock market can be a wild ride, full of ups and downs. When people try to chase trends or jump in and out of stocks for quick gains, they often fall prey to emotional decision-making. Maybe you've experienced this yourself, buying a stock because everyone else is, only to see it plummet, or selling in a panic during a market dip. This kind of behavior is driven by fear and greed, and it's exactly what Buffett warns against. Another common misconception is focusing solely on short-term gains. Many investors are obsessed with making a quick buck, but this mentality can be dangerous. It leads to short-sighted decisions where you might prioritize immediate returns over long-term growth. But here's the truth. Investing is a marathon, not a sprint. The real challenge lies in shifting your mindset from short-term wins to long-term wealth building. And that's where Warren Buffett's philosophy shines. Let's delve into Warren Buffett's core investment principles. These aren't just random tips. They're the foundation of a strategy that has built one of the greatest fortunes of our time. Value investing. First up is value investing. This is the cornerstone of Buffett's approach. Unlike many investors who get caught up in the excitement of the latest high-flying stocks, Buffett focuses on the intrinsic value of companies. What does that mean? Simply put, he looks for companies that are undervalued by the market, those whose stock prices don't reflect their true worth. Buffett doesn't just glance at a stock's price. He digs deep into the company's financials. He examines their earnings, debt levels, management quality, and competitive advantage, or what he calls the economic moat. If a company has strong fundamentals but its stock is trading below its intrinsic value, Buffett sees it as a bargain. He buys these undervalued stocks and holds on to them, confident that in the long run, the market will recognize their true value. Patience. The second principle is patience, and this cannot be overstated. Buffett famously said, "The stock market is designed to transfer money from the active to the patient." What does he mean by that? It's simple. Those who can stay calm and patient during market fluctuations are the ones who ultimately win. Buffett's investment style is often described as buy and hold. He's not in it for quick flips or short-term profits. Instead, he buys stocks with the intention of holding them for years, even decades. This patience allows him to weather the storms of market volatility. When others panic and sell during downturns, Buffett holds steady, knowing that over time, good companies will thrive. Patience also ties into Buffett's practice of waiting for the right opportunities. He's not constantly buying. Instead, he's like a predator stalking its prey, waiting for the perfect moment to strike. When he sees a stock that meets his criteria and is undervalued, he pounces. But until that moment comes, he's perfectly content to sit on the sidelines, biding his time. Understanding what you invest. In the third key principle is understanding what you invest in. Buffett is a strong advocate for knowing your investments inside and out. He's often quoted saying, "Never invest in a business you cannot understand." This is crucial because if you don't fully understand how a company makes money, how can you confidently invest in it? Buffett's approach is to stick to his circle of competence, industries and businesses he knows well. He doesn't venture into trendy sectors or complicated financial products just because they're popular. Instead, he focuses on businesses with clear, understandable models. This not only reduces risk, but also gives him the confidence to hold these investments through thick and thin. Now, here's the real key to success in investing, according to Buffett: having a long-term perspective. This is where so many investors stumble. The allure of quick profits can be overwhelming, but Buffett teaches us that the real wealth in investing is built over time. Buffett's long-term perspective is rooted in the belief that time is your ally in the stock market. He views stocks as pieces of businesses, not just ticker symbols with fluctuating prices. When you invest with a long-term mindset, you're less concerned with daily market movements and more focused on the overall trajectory of the business. This helps you stay calm during market downturns, knowing that these are just temporary setbacks in the grand scheme of things. But adopting a long-term perspective isn't just about patience, it's also about discipline. Buffett is incredibly disciplined in his approach. He sticks to his investment strategy, even when it's not the most popular or exciting choice at the moment. This discipline is what allows him to stay the course and reap the rewards over the long haul. In essence, Buffett's real secret to success is simple but profound. Think long-term, stay disciplined, and don't let short-term noise distract you from your ultimate goals. So, to wrap things up, let's recap the key insights we've learned from Warren Buffett's investment philosophy. First, embrace value investing. Look for companies that are undervalued by the market and have strong fundamentals. Don't get caught up in hype or trends. Focus on the intrinsic value of the businesses you invest in. Second, practice patience. Remember, the stock market rewards those who can wait. Don't panic during downturns, and don't rush to make decisions. Sometimes the best move is no move at all. Third, make sure you understand what you're investing in. Stick to your circle of competence and avoid jumping into investments that are too complex or outside your knowledge base. And finally, adopt a long-term perspective. Investing isn't about getting rich quick. It's about building wealth over time. Stay disciplined, stick to your strategy, and remember that time is your greatest ally in the market. Now I want to hear from you. What do you think about Warren Buffett's strategies? Have you tried applying any of his principles in your own investing journey? Share your thoughts and experiences in the comments below. I'd love to hear your perspective. And if you're hungry for more investing tips, don't forget to check out our next video where we dive into the best practices for building a solid investment portfolio. You won't want to miss it. Also, if you found this video helpful, make sure to hit the like button, subscribe to the channel, and turn on notifications so you don't miss any of our future content. Thanks for watching, and I'll see you in the next video. Happy investing!